Welcome back to the Deep Dive, coming to you from the Corner Room. I'm your host, and as always, I'm joined by our expert.
Great to be here.
We took a really close look at the stack of sources you sent over, and they focus on this. Well, this really strange and, frankly, tense intersection of digital finance, AI, and quantum physics.
It's a fascinating stack. I mean, what you really see is digital finance caught between these two just massive technological forces.
Right.
One is creating immediate, almost psychological market jitters right now. That's the AI angle.
Yep.
And the other is this looming, almost existential security threat that could just fundamentally change the foundation of digital trust. That's quantum computing.
That's a great way to frame it, the short game versus the long game.
Yeah.
So our mission today is to pull the key threads from these sources and, unpack these two distinct but heavily linked threats for you. We want to understand what's causing market panic today and then what technological reality is just, waiting in the wings to basically crack the security of every major cryptocurrency out there. Okay, let's unpack this. Our sources paint a fascinating and maybe a slightly chaotic picture of the future of digital finance.
It is definitely chaotic.
So let's start with the immediate pressure, the thing that got everyone talking last week.
Yeah.
You pointed out a market event where Bitcoin took a pretty significant dip.
We did.
But the cause cited in the articles. It wasn't the usual stuff like inflation data or central bank policy. It was, and I'm quoting here, AI worries.
Exactly. We saw Bitcoin briefly dip below that $90,000 threshold, which, always grabs headlines.
Of course.
But what's significant here isn't just the price movement itself, it's the why. The sources suggest that investors, especially the big institutional players, are starting to factor accelerated AI development into their fundamental risk models.
That feels incredibly modern. I mean, instead of reacting to an economic problem that's already here, the market is reacting to the pace of technology itself.
That's it.
But how does rapid AI progress actually translate into, selling off crypto?
Well, it seems to be showing up in two main ways, and both are really driven by fear.
Okay.
First, there's just algorithmic instability. As these AI trading bots get more and more sophisticated, they introduce new layers of volatility. You can get a sudden deep dip that's then amplified by all these automated systems reacting to the same signal.
So the machines start fighting each other and we all just feel the whiplash.
Precisely. But the second angle, I think, is even more compelling. It's psychological risk appetite. Traditional investors are looking at these breakthroughs, like highly capable LLMs and generalized AI, and they see an unquantifiable disruption event looming.
Like job displacement, supply chain chaos.
All of it. Things we can't even predict. And when that level of uncertainty hits the market, the natural reaction is to de-risk. And speculative assets like crypto, they're often the first things to get trimmed from a portfolio.
That's fascinating. So it's not just that AI might be bad for the economy, it's that it's too fast and too unpredictable for traditional risk management to even handle.
Right, which pushes capital towards safer havens.
Let me push back on that a little bit, though. Is the rapid progress of AI really the root cause here? Or is it just the newest, most convenient excuse for a dip that was maybe going to happen anyway from, standard profit taking?
That's a critical question. And the sources, they lean pretty heavily towards a structural change.
Oh, really?
Yeah. They note that discussions about AI's impact on portfolio allocation were, rare a year ago. Now they're routine in high-level financial analysis. It suggests the fear isn't just manufactured.
So it's real.
It seems to be a reflection of genuine institutional concern that, a technological singularity or something close to it is a non-zero probability that has to be modeled now. Wow.
So what's clear is that whatever the underlying cause, AI is injecting this immediate, sharp volatility into the risk asset landscape.
That volatility is, well, it's unsettling. For sure. But like I said, it's just volatility. It doesn't break the underlying technology.
Right.
Now, here's where it gets really interesting. If AI is making investors nervous about short-term market swings, quantum computing threatens the very mathematical foundation that cryptocurrency is built on.
Yes, this is the big one.
We have to shift from this immediate market-driven fear to the fundamental existential security risk posed by these quantum machines. So for the listener who, might not spend their weekends reading theoretical physics papers, can you simplify what makes a quantum computer so different and how that difference makes security go from very difficult to instantaneously cracked?
Certainly. So think of a classical computer, the one you're using right now. It uses bits.
Okay.
And bits are like simple light switches. They're either on, which is a 1, or they're off, a 0.
On or off. Simple. A quantum computer uses something called a qubit. And because of a property called superposition, a qubit can be both on and off at the same time, or really anywhere in between.
A switch that's in 2 positions at once. That's hard to picture.
It is. But this allows the quantum computer to explore these vast computational landscapes all at once, simultaneously, instead of checking possibilities one after the other.
So it's massive parallel processing.
On a scale we can barely imagine, and that is what specifically threatens our current digital security.
And what's the name of the mathematical weapon that uses this new power?
The villain of this story is called Shor's algorithm.
Ah, the sci-fi movie bad guy is back.
And this algorithm it's terrifyingly effective. Shor's algorithm is mathematically perfect for one specific task, factoring extremely large prime numbers very, very quickly.
And that's important because
It's crucial because almost all modern digital security, the locks on every digital vault we use, relies on the assumption that factoring these enormous numbers is so hard that even the fastest classical supercomputer would need like billions of years to guess the answer. The difficulty is the security.
So our security relies on things being too hard to crack, not actually impossible to crack. It's a time lock.
Correct. And the specific type of time lock used by virtually every major cryptocurrency, Bitcoin included, is called elliptic curve cryptography, ECC.
ECC. Okay.
And ECC is used to generate the public and private key pairs that secure your wallet and, validate your transactions.
Right. So if someone sends me Bitcoin, they use my public key, which is like the address from my vault, but only my private key, which comes from that super complex math problem, can actually unlock it and move the funds.
Precisely. Now, if a sufficiently powerful quantum computer running Shor's algorithm can factor that massive number quickly, it can calculate your private key just from seeing your public key in seconds.
In seconds.
The sources were absolutely clear on this. A successful attack would allow someone to just steal Bitcoin and other cryptocurrencies on a massive scale. It would lead to the complete destruction of trust in the system, not just some volatility.
That just reinforces the gravity of it. It's decryption, not just disruption. But this leads to the critical question. When does this stop being a hypothetical risk in a lab and start being an actual danger that could empty my digital wallet?
Well, the timeline is entirely dependent on one key technical milestone.
Yeah.
And that is achieving fault tolerance.
Fault tolerance.
Building quantum computers is incredibly difficult because qubits are so sensitive to noise, to their environment. They make mistakes constantly. Fault tolerance just means the engineers have developed robust error correction to stabilize them.
So we need reliable, large-scale quantum computers, not just finicky lab experiments.
Exactly. Once a machine reaches the size and reliability needed to efficiently run Shor's algorithm against, say, real-world 256-bit ECC keys, well, the timeline for cracking current crypto security shrinks to basically nothing.
And where are we on that?
The consensus seems to suggest we might be a decade, maybe less, away from seeing this capability emerge. The race is already on.
But there has to be a countermeasure, right? We can't just be sitting here waiting for the apocalypse. What are the world's cryptographers developing right now?
Thankfully, yes, there's a global effort underway. It's called post-quantum cryptography, or PQC.
PQC, so fighting mathematical fire with a different kind of mathematical fire.
That's a good way to put it. It's about designing entirely new encryption standards. PQC algorithms, they pivot away from factoring large numbers, and instead they rely on different new types of complex math problems.
Like what?
Things like lattice-based cryptography or code-based cryptography, problems that are believed to be resistant even to quantum attacks. It's a massive but absolutely necessary infrastructure overhaul for the entire digital world.
The sources you sent mention standardization efforts. Can you elaborate on that? It sounds like global cooperation is pretty key here.
It's absolutely essential because the quantum threat affects every secure system worldwide. You can't have everyone using a different fix. It would be chaos.
Right.
So organizations, most notably the National Institute of Standards and Technology, or NIST, in the U.S., they've been running this multi-year competition to vet and select the strongest PQC algorithms.
So they're stress testing them to find the best ones.
Exactly. This whole process is about establishing new global standards to future-proof everything from government communications to financial transactions. The goal is to deploy these new quantum-safe standards before a fault-tolerant quantum computer is actually built.
So what does this all mean for you, the listener, whether you hold crypto or just, use secure online services, it means the race is officially on. It's a sprint between the engineers building bigger, more reliable quantum computers on one side and the cryptographers deploying PQC on the other. And the success of that PQC deployment is really the only thing that guarantees the long-term security of your existing digital assets and, frankly, the entire internet.
That's the crucial takeaway. Our sources show us these two parallel high-tech challenges driving all this concern. On one hand, you've got AI causing these sudden dips linked to AI worries, a phenomenon of perception and algorithmic chaos.
Yeah.
And on the other, you have quantum computing, which is this slow-motion catastrophe demanding a massive, unprecedented, and preemptive overhaul of our entire global digital security infrastructure, all before the clock runs out.
It's incredible to think about. The markets are already panicking over AI's potential, while the security experts are quietly racing to rebuild the mathematical structure of the internet based on a threat that hasn't even fully materialized yet.
It forces us to redefine what we even mean by technological risk.
It really does.
Technology is proving to be both the engine of global prosperity and, at the same time, its greatest potential security liability.
And on that note, let me leave you with a final thought to mull over. We focused really heavily on how the vulnerability of elliptic curve cryptography, of ECC, is the core problem that PQC is trying to fix for Bitcoin.
Right.
But remember, ECC secures almost all secure online communication. It secures your connection when you log into a website. It secures VPNs. It validates countless digital signatures all across the globe.
It's everywhere.
It is everywhere. So the question isn't just about crypto wallets. What are the broader non-financial digital systems? I mean, think about government databases, critical infrastructure, power grids, long-term medical records that are all currently secured by these vulnerable ECC standards. And are those sectors prioritizing the switch to PQC with the same urgency as, say, the financial and defense communities? The risk is universal.
That's a very critical question for everyone to be considering moving forward.
Thank you for sharing your sources with us for this deep dive here in the Corner Room. We'll catch you on the next one.
Goodbye for now.